Send it out to Michael. There we go. Michael, I'm giving you a
Hey,
hug. I'm running up and giving you a hug, buddy. How's it going? I miss you. I miss you so
I'm doing
much.
well. I'm doing well, man. I've had a very relaxing time away from everything and everyone, and just family focused. And this is
Good for
it's
you.
it's just
Good
I
for
feel like I'm
you, man.
refreshed.
It is. It is. Family is so nice. I can tell you, I've done a little bit of family time as well. My daughter graduated from high school and is getting ready for college and all this stuff. And she's Latina, so lots of family members have been in town. So her aunts and her uncles and her cousins and literally the entire, her mom's everybody in town. Some of my family came in. My family's just so much smaller than hers. So anyway, it was really, really nice to get, as you're saying, kind of reconvene around family. It's always good to re-energize. So
Congratulations,
anyway,
it's beautiful, by the way.
thank you. She's going to major in applied mathematics and she wants to study languages. Her grandfather is from China, so I'm telling her try to study Chinese just because I think it would be good to add to the relationship with her grandfather, who
Yeah.
lives in Panama, is from Panama, but came as an immigrant from China. And my ex-wife is half Chinese. But anyway, that's beside the point, Michael. It's nice that we get to catch up again. The live stream was amazing. I believe your concepts are working fervently on the charts as they always do, and it's just great. Has price action has been challenging. I think just talking with a lot of folks, confidence has been shook, Michael. A lot of folks are, I think questioning and challenging even themselves of what they're doing. And I think it's nice you being able to lead and confidently demonstrate these concepts the way that you do. But I definitely see some folks that have been pretty frustrated with these market conditions and kind of struggling a little bit. Lots of drawdown conversation as well.
Well, admittedly, if I was in there with the same measure of you know trying to participate in everything that I would usually try to do, I would be suffering alongside of everyone else that's feeling it. I think that pulling back the amount of effort and seeking so much participation and just being highly selective, like being very, very selective on what it is you're anticipating and demanding a whole lot of things, lending itself to that outcome possibly manifesting itself. So if it's not a whole lot of things supporting the idea that the market's going to go to a specific price level, then you're probably not looking at something high probability and you're trying to just do something because you're either going through drawdown, you want to escape it as fast as you can, or you're bored, or you're depressed because everything's so costly. So everything's so costly and it's hard right now. Everybody's feeling it. I have family members that are crying to me on almost on a daily basis, and friends too, saying, "Look, is this ever going to turn around?" Like I have a crystal ball in that regard. I don't know. I do know. Well, let me say this way. I think it's going to get worse, and I don't have an answer for everybody. But what I'm trying to do is stick to my own lane and just try to stay where I don't allow for a lot of I guess, the emotional, drawdown that for things I can't fix and people that I can't help beyond, you know, giving them advice and telling them what they should and shouldn't do. They're not going to listen to me. The ultimate expression is, well, can you help me out and bail me out and give me some extra money? I made some bad decisions. I bought this, about that. I don't do that. You need to learn from that. I'm not going to let them go homeless or nothing like that. But I mean, I just can't. I can't bail everybody out. So that's where I've been at last couple of months. And while I'm not getting beat up in the marketplace, I'm getting beat up with friends and family because they made poor life choices. And I told them that they were going to be seeing these types of things happening, and now they're having to deal with it. So I can imagine all of the folks out there that are going through that type of thing as well, while still trying to learn this when the market conditions are extremely difficult and they haven't gotten easier. They're harder, okay, despite whatever you see me doing. It just means that I'm really, really focusing on very specific things and a lot less participation. I miss that. I want to see the markets return back to where I can take multiple trade setups inside of a day, whereas now I'm stuck in maybe four. Four is the high end, and it's very hard for me to get that fourth one. Third one sometimes gets a stop out, and I give back something I've worked on in the earlier part of the day. I was seeing that yesterday. So you're in good company. It's not something. It's just you only. Everybody that's trading is having that same thing, despite whatever they tell you. So anyway, it's good to have y'all in attendance, and it's good to be back hanging out with y'all.
Absolutely, buddy. Absolutely. Um, these market conditions, as you mentioned in your live stream, potentially kind of loosening up a little bit, potentially unseasonably for the summer. It kind of does feel that way. We are operators within the market with a lot of experience, so not everyone has a lot of experience, so every year is going to be different. A lot of stuff kind of dictates that, like there's a lot of IPOs, there's a lot of tech, there's a lot of companies that are going to be coming and reporting, and I think that's going to be adding a lot more, almost a catalyst towards attention. Right. I think they're putting a lot more attention on the markets. And I also wanted to mention, Michael, someone who's also very experienced with this. I think it's ironic, the harder life gets, the more folks kind of look at trading and they say, like, you're lucky or you're involved with trade. Like, when life is difficult is when it's easier for a trader. And that's kind of unfortunate, but the markets are easier for us as, like, there's this squeeze economically, right, within everything. And there is this misfortune around us where there are potential setups and opportunities within the market that are, the opposite of being poor, right?
Hmm. When they see the storm, we're anticipating the rainbow, and we are not disheartened by bad things. Unfortunately, it doesn't make us hateful people. It doesn't make us insensitive people. It just means that we're opportunists, and we didn't create the problems, but we are not going to stay victims to it. Where the uninitiated they would, and unfortunately, these things aren't taught to us. You have to go out there and acquire it and procure this information as a secondary income, or not income, but secondary education, because otherwise you're relegated to just simply whatever income your trade or your education, quote unquote, affords you. So that's one of the positive things to being a trader. We can make lemonade out of lemons.
And that self study, which is, again, what we're all about, within empowering people to be able to take that on while they're working, while they're caring for their young children, while they're helping their parents, while they're living their life. They have an opportunity, they have time, they have a choice. The choice that they make, they can spend time and focus on free material that you offer on your YouTube channel. There's an entire compendium, there's years and years and years worth of mentorship. There's so much free education. In my opinion, Michael, 2026 is nothing but shutting down every private mentorship. Like, there's no reason anyone needs to pay for anything anymore with the level and the quality of the content that you are providing single handedly through your YouTube channel. And then what we get to try to bring in adjacent here on X.
Well, I mean, I'm sure there's a certain measure of truth to that, but that's not my motivation. I know there's going to be people out there that have affinity for certain personalities, and they may be students of mine. They may be other people that trade other ways, and I'm not trying to hurt people. I'm just trying to remind people that take my stuff and they try to sell it and put a price tag on it. You're really not in a position to be able to do that, because you're speaking. It's like reading the first 5 chapters of a 150 chapter book and saying, "I know the story." You don't know anything.
Absolutely. And I think you see that often. You see a lot of folks that claim to know ICT concepts. I mean, Michael, I don't know. I mean, I talk to a lot of folks, and talking to some charter folks who are profitable, and then having just a regular casual conversation about, like, IPTA, and them, like, they're like, "Kid, how do you know this?" I'm like, "What do you mean, how do I know this? This is part of the concepts that you've been taught." And for somehow, as traders, because there are so many concepts, people gravitate and they hold on to certain things, and then they kind of let go of everything else, which I think is fine. And I think that's, maybe one difference with some of us, or those of us who have studied longer, is there's just more and more of those concepts that have kind of, you know kind of stuck to us with where and how our universal trading is, where and how we see the market as you teach it. But there are some folks within the community, again, like, I mean, they don't understand some of the most basic facets of what you've taught, and they're profitable and they've been trading with you for a long time. So within the community, I find that funny. Do you know what I mean?
Yes.
It's really funny to me. You have private charter students that are profitable, but don't understand some of your concepts.
Hmm.
And I find that on Front Street, I want to say funny, but not in a bad way. It's
It's
just like,
peculiar.
I'm like,
It's peculiar.
it is because I literally have conversations with your private charter students one on one. And all I do is I say, I'm going to remind you what you already know, and it's going to 10x your model. And I literally go over with them what they already know, what you have already taught. But somehow, so many traders do this, they forget, they get complacent. They find a way in which, and I don't think there's anything wrong once you have a model, trading your model, but being consistently, I mean, being the ability to apply the concepts over existing market conditions, there's always a layer of uncertainty and need to study, I would say. In
Yes.
I don't think enough people do that, Michael. I don't know. Again, you're going to be able to understand this conversation better than most folks within the community because you really understand behind the veil of what I'm saying, right? How are there so many folks within your community that there's such a disparity in their knowledge, but they're still successful? I mean, what do you think about that?
Well, the enormous amount of information to wade through just to find something that's going to start working in your hands is astronomical. It's a big barrier to overcome initially, and for the ones that finally get to that part where they can make some rhyme or reason out of what price is doing, and they can capitalize that monetarily. They don't want to upset the apple cart, so they try not to take on anymore because they're just relieved that they can get this part of it and get a little bit of and of their investment in time, and if they were paid membership students, they get a return on their investment in their own hands. So I think largely it's that. Um, but if they would listen to how I taught and how I still teach today, whatever you start with as your initial model, it's probably not going to be your model that you live on, but it's going to be the foundation upon which the model you see later on is going to be central tenets that are still germane to that. That means the draw on liquidity, when the market should stay bullish or remain bearish, and what would change that. And you may only have one pet PD array, one specific entry criteria. But once you know it really well, the idea was when I was teaching them is to implement new ones slowly. And if at the very minimum, when you're doing your back testing, because you still should be back testing, you should always be logging, even when you are profitable, because that's what makes you sharp. That's what keeps me sharp. I'll be 54 this year, and my concern is I don't want to lose my mental faculties. I want to make sure that I keep this very sharp mind that God's blessed me with. So I don't want to mess that up. So I keep things constantly refreshed in my memory because every 7 years, small little pieces inside your brain, they break off, they slough off like skin cells, and you're losing memories, you're losing depth of understanding, and if you retain things, you'll lose resolution over time. But if you, like I do, I take pictures of a lot of things. I journal things. So what that does, it helps me relive that moment and becomes a new memory. It fills in that little void or gap on these little things inside of our brain that break off. I'm not going to go into a scientific rant about it, but you can do a research on it. But by having a vested interest in pursuing additional PD arrays, it will make you a better, well-rounded trader. Even if you don't implement them as your entry criteria, it'll help you stay with your trade idea because you see them communicating something that they're designed to do. For instance, inversion fair value gaps. You may not even use an inversion fair value gap. You don't even touch them. You don't use them. You don't do anything. You're just an order block guy or gal. And it's all you care about. But when you start to understand them, you don't need to know when they form or before they form. But when you recognize them after the fact, that's going to support a trade you're in. So that way you can say, oh, yeah, I'm really on side because look, there's another PDA, right? I can see it's there. And you can identify it in hindsight, but it's still beneficial to you because it's providing more intel, more uh, confidence to your trade idea if it's a sustained price run you're still reaching for. And if you keep seeing these types of things, other PDA rays supporting the idea, even if you see them in hindsight after they form while you're in the trade, that's beneficial. But in the beginning, most traders are saying, I'm not interested in anything else. It's kind of like the badge of honor in the last couple of years. Some of my students have gone out and said, just do this. Only worry about this is the only PDRAs that work, and forget everything else. Well, that's a myopic perspective, because what you're saying is this is what worked for you. But I can go out there any given day, and please don't accept this as bragging because it's not. I can go out there and say, I'm going to handicap myself. I'm only going to use this PDRA today, and I'll trade, and I'll find the setup and I'll use it. I will do that, okay, in any time frame. But that's understanding that the average person is going to have. That's not understanding that the person that finds their first model is going to have. So that's like one of the things I have an issue with. And I didn't want to come on today to have like a beef with any of my students or anyone else. But the things that do get under my skin is when they try to say, I watched everything that ICT put out, I know it all, and now this is the only things that work. Forget everything else. If you listen to anybody that talks like that, I promise you, you are stunting your growth. And it's not because it's my content. I could care less. Okay. But if anybody tells you that, you don't even have all 33 years of my experience divulged to you. You don't have that. How are you going to sit there and say, I watched everything he does and what he's done, and I know it better than he does, and I'm going to condense it down and give you a 5-minute trainer, and therefore this makes you more profitable. You don't. Where's all the Lamborghinis from all those students that are doing it through the shortcut version? You don't see that, but you see paid mentorships growing because that's the income stream. And I'm not knocking those guys. Okay, things are hard. You got to do what you got to do. I get it. I understand. Okay, but for the folks that are listening to these types of people, using used car salesman tactics, why buy the cow when you get the milk for free? And I'm trying to tell you all, going fast is not the way you get there. Slow is smooth, smooth is fast. And starting small and looking for one particular little thing that gets you into a trade setup that's forming just about every other day, over time, that every other day format will become an everyday setup because you've learned to incorporate other things to support the idea or negate an idea that would otherwise be problematic or a net loss transaction. So it's a matter of where you are in your journey, how you're going to pursue that journey. And if you turn the valve off and say, okay, I've drank enough, I'm full because I can make a little bit of money. Take a break, take 6 months or maybe even a year, plateau right there. Okay. And then come back to incorporating new stuff, new PD arrays. Okay. And I promise you, it's going to benefit your model. You're not tinkering with it and changing it. You're just adding support structure to when you're in a price run. Go back when prices dropping in your favor, going up in your favor. Look for the other things you don't know too much about, have never used, but you are familiar with them because you've gone through my content. Seeing them in hindsight will help bolster your confidence with the price runs you're part of. And I don't see enough of my students doing that. I hear a lot of them saying, this is all I like, this is all I do, and I don't care about anything else. And that screams to me
I
that I just finally made it to profitability, and it was an arduous task, and I'm so exhausted. I don't want to do anything else but just this. I'm thankful, and I'm done. And that's okay, but that's not the experience I set out for as an educator using it.
there's a cascade effect to the utility of not just the PD arrays, but also the concepts. And the trader is going to be rewarded with applying different concepts, utilizing different concepts. And again, to me, it's shocking how many concepts there are because there's such a large community with so many folks that see the same thing so differently, and that's a beautiful thing. That's a very good thing. I think that can help improve the trader. But that also is why, I mean, what Michael is suggesting, again, I feel like Michael's talking to the charter community because I feel like I have a strong bond with a lot of folks that have studied within the charter community, either privately or within the YouTube channel. So, folks who have been studying Michael's concepts for a long time, the ideas about stitching it together. Finding things that work within market conditions and being able to apply them and utilize them in some form of consistency. And that's what you're seeing him do. And that's what you're seeing folks within the community do. And that's what you're struggling for is, well, how do you find what you're looking for? And the gaps are important. The concepts that you're being taught are important. The ranges that you're being taught are important when we're at these high level prices, your projections, your fibs. I mean, your bullish projections are just equally as important as your bearish arrays in arranging asset. Would you agree with that, Michael?
Wholeheartedly.
And I don't think enough folks utilize and understand the importance of the market condition that we're dealing with. I mean, they're every. I mean, I can't tell you how many folks I'm talking to. They're like, "Kid, this is where I want to short to." I'm like, "Why are you shorting?" Like, I appreciate yes, short, absolutely, absolutely short. And if you see it, trade it. But I mean, I don't know. I don't even know what I'm trying to say, Michael. I want to get back to more folks. I feel like I'm ranting now, and I don't mean to. I'm just so excited to talk with you, buddy. So, um, anyway, I got to rant. I apologize, folks. I didn't mean to. Um, love to bring folks in. Thank you just for chuckling at letting me rant. um, okay, Market Oracle. We'll bring in Market Oracle, and we're going to go one at a time. If you guys would let Candace, would you pretty please come up? Candace, a good friend, she's going to say no because she's going to say something about her English or she'll feel shy. I would love for us to get Candace to come up. I would love to have her come up. She trades. She's been very much involved with her community, and I already know she's gonna be like, "No, kid, I'm shy." Okay, that's fine.
Don't be shy.
We'll move. I know, and don't be shy. All I can do is invite, and then we'll move forward. But
Candace,
Candace, come on up.
come up, Candace. Come on up.
It's gonna be like, there's too much
Hang
pressure,
out,
kid.
girl.
I can't do it.
Candace.
Yeah,
Yes.
Come
come
on.
We are
on,
rooting for you,
Candace.
Candace. Come on.
come on
Candace.
down. Yeah, we need to play like The Price is Right or something.
Yeah.
That'd be fun. Anyway, again, we're adding pressure. Don't mean to. We're having fun lightheartedly. I get the good. We got the heart. So she's like, "Thank you, but no, thank you," and that's okay. I'm pretty sure it has something to do with just her comfort speaking.
It's
But
fun.
anyway,
It's normal.
that's fine. We'll keep asking. I don't have a problem asking. So we've heard from Peter and Pit Munch quickly, our co-host, and Pit Munch. How are you, Peter? How are you? We're going to be circling around other folks. I just want to cordially say hi to everybody. Peter, Pit Munch.
Yeah. Hi everybody. Nice to talk to you. I'm good. Fine. I'm quite fine. Yeah. I mean, I had a couple of minutes at the beginning, just talking about little things. But yeah,
Oh
I'm excited
yeah,
to talk
Michael.
to you
Peter
as well.
wrote an article. I think it's on his page, but he did some stats and data on the lunch macro, and I mean he was applying ICT concepts, and he put a lot of data on it. And he found kind of uh, um, a low frequency, high expectancy model around the data. So he wrote that article, and it kind of we pushed it out. It was while you're on vacay, but maybe I was like, hey, we'll mention it, and then when you get a chance, whenever, maybe you can go back and look at it because I know you'll enjoy that. But it's a good, nice article Peter put together, and we talked about it last week too. So
Can you retweet it and then I can
yeah,
find it by going to your profile if you don't mind?
yeah, yep. I will right
I
now.
can't promise
I'll
I will
do.
get to it today, but I'll get to it.
Yeah,
Do
no
it a
big
week.
deal. There's the German version, lunch macro research. Okay, yes, here I'm retweeting it one more time. There, I just retweeted it, so it's there, and we'll move forward. Going on. Thank you again, Peter. You will enjoy that when you get an opportunity, Michael. Continuing the conversation. Lots of folks here. Market Oracle.
What's up?
What's up?
How you doing, Michael? Good to have you back. It's been
Thank you, sir.
so long, so long.
Yeah,
So
what do you got for us, Market Oracle? You got
as we
anything?
last said, we have to wait for Kevin Marsh to join as the chairman of the federal board before the things get better in the market. And here we are with ranting for the last 15, 20 days or maybe a month that markets are going silly. We are going silly with the markets, but all we had to do was wait, just like you anticipated, as always, just like you told us. And here the markets are now getting normal again, back to normal. And I have a couple of questions. Is that all right if I
Yeah, go ahead.
ask?
Jump in with a question, Market Oracle.
So my question is, do different macros have different objectives? Like giving an example, is the objective of 10 a.m. macro to manipulate the range of AM session and go other way, or is do different macros have different agendas? That's my question.
Not in a generic sense, but the application of those macro times in concert with what has been transpiring in price, with the session, pre-session, overnight session, all these things that help build narrative, they are many times either supportive or they're meant to disrupt and negate what was already been done. So it's a catalyst. It's not a it's not a it's not a fixed outcome based on a specific macro time. It's a expect something either in support of what's already happened or the opposing aspect of it.
So it's the conditional statements of the
If then,
inefficiencies and the if then statements of inefficiencies and liquidity paradigm, right? I mean that
yeah,
if the
yeah,
generic way of looking at it, Michael, would you agree?
yes, yeah. It's kind of like you're at a crossroads. It's either going to support what's already been happening in price, or it's going to go the opposite direction. And if you understand what we're looking for in terms of withdrawal, it builds an anticipatory expectation around that 20-minute window. So you can anticipate, like in other words, if there's relative equal highs and we're approaching that macro time and we have already moved up a little bit and we drop down below a short-term low right before that macro time begins, well, you know what's going to happen. The macro is going to send it up towards that relative equal high because it took the stops. Now we're entering a time when it should displace and move towards liquidity or inefficiency. Well, it took stops. And your bias should already been bullish anyway. So if you had that type of criteria, that means that macro is going to support the idea of a price run after that manipulation, taking the sell side out, engaging people that are algorithmically using algorithms to chase momentum. They're offside now. They're looking for lower prices. Those that are already long are neutralized, and that macro time should start supporting a run towards those relative equal highs. It need not get there inside that 20-minute time. It just initiates the beginning run that puts us into those relative equal highs. So that's kind of like an example.
Thank you so much, Michael. And
You're very welcome.
I have been
What a
and I have
great
been getting
question,
some.
bro. Great question.
Thank you, Kate. I have been getting some questions. Like, I'm from India and I trade with your concepts. I've been getting some questions about do these concepts work with Nifty 50? And I would like to say that yes, to a bigger audience, yes, they do. I have been backtesting it for over 6 months, and model 2022 works. Your standard deviations work. Everything that you have explained with concepts, they all work.
That's fascinating. I've
In
had so many people around the world, and everyone that's uh, central in India, I feel like I'm really of no help to them because they always come to me and they say, "Do your concepts work in the Nifty? Do they work in Indian markets?" And I'm like, I don't have personal experience in it, but I don't have any testimony that I can share with it. But over the last year and a half, more Indians have come forward and said, "Hey, look, this is what's working. I mean, it works. Definitely, it works." So it's not by me saying. That's why I never touch it. I never speak on it because I don't have the personal experience with it. But I love hearing the feedback, and I love listening to you say that you see it working in your hands, and that to me is it's a blessing. I'm honored to to receive that feedback because I don't see it. I don't study it. I don't participate in it. I don't have any kind of personal experience that I can stand on and say, I've been doing it. I've done it. I can't do that because it's not a market I could trade, and I've never really had an interest. But you as a local there, you as someone that actually participates utilizing it, I absolutely love the fact that you're willing to share that, and other people that have studied it have done the same thing. It's wonderful feedback. I love it.
Thank you, sir. I've been using it for selling options and in the index market, and these concepts work really well. Well, you have to be careful, like do not overtrade, revenge trade, all that stuff. But it's amazing that your concepts work in a market that you have never touched before. Is a great testimony that there is a central algorithm and everything is being controlled by that. Thank you so much,
It's
Michael, for
amazing. It's amazing that I can teach a language that tells you how even all the Indian traders does the buying and selling pressure. I measure all of that in advance and tell you how to do that. Isn't that crazy? It's so fun. Oh,
That's wild.
the analogy is if it's buying and selling pressure, I don't know how to speak Indian. Like I can't. I don't know what your language is. You could tell me the best compliment or cuss me out in Indian. I would never know what you're saying. But yet these principles are beyond vocabulary. It's a language in and of itself. So the fact that you're giving feedback like this is such an inspiration to me as its creator. It's just wonderful to be able to hear this type of thing because it bridges a language barrier. And you may not understand me as what I'm teaching, but if you know what I'm teaching and you apply it in your own hands, it transcends English barrier. It transcends, the language that would be spoken in your tongue and my tongue. It's needless because we're now going to find a common ground language, which is what price is going to do. And I think it's wonderful because if there wasn't an algorithm delivering price, there's no justification for what I'm teaching to work in your hands with a language barrier. The language barrier is broken down by this. And that's how I see it, and that's how I internalize when I get these types of feedbacks. And it's not just there. I get it from folks that are in China. I get it from folks that are in Japan. Folks in Africa. Kenyans. They say, hey, look, this is what I'm doing. I'm using this and that, and it's wonderful. It's wonderful. And to me, it's just one more testimony. Not to me, but it's a testimony that these markets are absolutely rigged, and they're all using the same context: artificial intelligence. And you think AI is a new thing? It's been around since electronic trading started. Before that too, you're just getting the low level AI. You think that you're using the best of the best when you're putting little memes together. You're not. That's what they're letting you play with. That's the toy side of it. That they've been utilizing this stuff for a long time, and they've been implementing it in 3D programming. But that's another conversation for another time. But thank you for your feedback. I'm short on time. 10 minutes after 4, I got to escape. So if you want to roll to somebody else, it's
Okay. Okay. Yeah, we can do that. Sense has got his hand up. And if you guys have got some questions, I mean, I'm still I'm in beta with it. I'll mention it here. Should I mention it? I will. TraderRoundup.com. It's in beta, but it houses all of our podcasts. It puts everything there, and it's really meant to house a lot of stuff. And it's just an opportunity for you guys it's an extension of what we're doing here. So it's kind of in beta, and we'll see how folks log in and get access to everything. But it's meant for you to study and utilize Trader Roundup as an opportunity, as the platform to learn, as it has been. So traderroundup.com is a thing now. So even Michael, check it out. You'll like it, I hope. So yeah, anyway. With that said, Sense, you got your hand up. Go ahead.
How's it going? Can you guys hear me?
Yes, sir. What's up?
Hello, my name is Sense. I've been trading ICT for around almost 4 years now, and I particularly trade within macros. I traded the 2022 model for a long time. I kind of had a question. It's glad to have you back, by the way, Michael. I appreciate you joining the TRU today.
thank you.
But I kind of had a question related to the last one that was just asked about macros. A couple of weeks ago, I asked you about imbalances forming within macros and their importance. And you told me to look at them like an important area of liquidity because at that point you're blending time with price.
Mm-hmm.
But I realized that when I extend these imbalances within macros, specifically the highest time frame imbalance formed within it that I can find, price seems to consistently react off of it. So my question was whether or not certain macro imbalances carry more weight than others because some of them open at higher time frame, like key openings, like the 8 hour, or like I'll go on TradingView and set the 24-hour candles, and it's 1800. And I really like using the either the first imbalance forming within 1800 or the largest imbalance I can find, and I'll extend it, and I'll use them up to like a 6 to 7 day look back. And it has been providing me with a lot of good trades. So I was wondering how I could further study this and kind of if some hold more weight than others.
Well, any inefficiency that's during that macro time, if you project that forward, you're going to find a setup that yields either a target or an entry or a stop placement management. It's gonna yield beneficial information and intel to you. So I don't want to strip down your curiosity and because you're on the right path of finding something, but I don't want to lay it at your feet because you're very very close to what it is that you would be finding doing what you're doing. Just keep probing around what you're doing and how you're doing it. But you'll see that there isn't any specific key time frame. All the time frames are going to have an inefficiency. And if you project any and all of them, they're all going to give you some level of importance of where price may or may not react. Like what I did today um, in Q. There was nested inefficiencies with the same
Oh,
facet applied
I,
to. I'm sorry.
no, no, no. I was just gonna say I didn't even know you called them nested. I started calling them nested. Sorry, I just got a little excited. Let me let you continue.
Yeah, um, that element is really good to kind of like ferret out like a blended range where then you can get very specific, like what I was shown today. So, but it has to utilize what the market structure and what you think the market should be doing. Like, where is it going to go? Where are those inefficiencies in deference to whether we're going higher or lower? And by keeping that in mind, it just having the inefficiencies that form in that little time window of 20 minutes in and of itself is nothing. But when you blend it with narrative, time of day, how the daily range should form, how the daily range should be retraced during the lunchtime, all those things come together and it gives you it's kind of like a stereogram. You know what a stereogram is? The little
I
pictures
believe
that
so. Yes.
you stare at it and you let your eyes go across or relax your eyes, and all of a sudden you see a picture that's created inside of all that chaotic pattern. You end up getting that kind of effect in reading price actions. Like you blur out all the other stuff and your eyes only go to what matters. And when you relax and you don't try so hard, you'll see an image that's much more clear and much more structured. And that's what it's like when I'm looking at charts. And when you're delving into what you're doing now, you're getting closer to that very thing happening to you.
Yeah, I feel like it's like lifted a veil almost. I don't know
You're,
how to
you're,
explain
you're
it.
so you're so close to it, you don't even realize it. But when it happens, it's gonna be like, what in the world? It's been there the whole time. Yeah, it's been there the whole time. But it's random, right?
Okay. Yeah, it's pretty random. I'm gonna study it hard then. I just wanted to take like 30 seconds real quick and also say, for anyone here struggling, I was in a really hard time in my life, and I wasn't much of a believer or anything like that, but I had an experience that kind of made me start praying, and I feel like my spiritual connection to God has gotten much stronger,
Awesome.
and I started finding all of these things the second I started praying, and I've been sharing it with everyone I know, and I just wanted to say that if anyone here is struggling, to keep going and keep studying. And I just wanted to say, God bless you, Michael. I really appreciate it, and I'm going to keep studying hard.
Praise the
And I
Lord.
appreciate the community as a whole, everyone here, Kit, you, Pit Munch, everybody, and just
Awesome.
yeah, I appreciate you answering the question. I'll let somebody else ask something, but thank you. Have a good day.
Thank you so much for sharing that.
Yeah, that was awesome. Appreciate you, Sense. That was good. Good thoughts and 2 cents. The pun was intended. That was a dad joke. So
Nice, nice.
only Michael could
I was
appreciate the
thinking
dad
it, but
joke. Well,
didn't
not only
say
Michael, but Michael could definitely appreciate the dad humor there. So next up, we'll get Levi. Levi, you there?
Yeah, I'm here. Fine.
What's going on? We have a lot of some of the regular folks that have been up here, so that's not intentional or unintentional. I'm if you have or would like to come up, I'm gonna. Oh, we got Pippi B. Let's. I'm looking at some of you guys. I'm trying to just request take some of you guys and pretty please continue, Levi. I didn't mean
Okay.
to interrupt.
Of course, of course. Protocol. Okay, my name is Levi. I've been trading ICT concepts for since 2022 when it first blew up, and I've been just follow along the continuous learning since then. Like each year, like he's been bringing out new stuff and going through like throughout the whole months and all. So I've just been following through that. And how I trade, I mainly use the 2022 model because that's kind of what I started with. So it's kind of like really hard to, not hard, but just what I focused on, and I guess I traded there.
That's what you see the
Yeah,
easiest, right? Like
yeah.
you see 2022,
And
right?
then I guess
That's good.
everything we've just learned so far is kind of just extremely amplified it and more like specifics of what you're doing and what you're looking for, especially incorporating the open range gap, using the gradient levels to find the preferred gaps to use to go short or go long. And I'm also using I guess incorporation of a higher time frame per value gap, like in the sense of like a daily template. If we're going to do a continuation date throughout 9:30, so I'm looking for trading into that 1 hour gap, looking for a confirmation setup like a break of structure. Maybe sometimes there's already blended equal highs there, trading into that fair value gap, and then I'm going short, aiming for the direction of the daily bias or wherever I think it's going to go to on a larger time frame horizon. But my question is, I have a question towards engineered liquidity in the sense of like if you see how like on the NQ today we dropped all the way down to those equal lows that were left from yesterday, and sometimes I have this issue where I'm expecting it to be it's sometimes SMT divergence or an sense of engineered liquidity where they don't take it out the same day and they take it out a different day, or let's say it's Tuesday and it gets set up to get taken out on a Thursday, and I see myself always falling victim to it because I go short or go long in difference to that scenario, but it's left there in place, and I'm still aiming in that direction, thinking it's either SMT or a drawn liquidity. I don't know if you have anything you
Well, I
want to talk
mean,
about.
did you watch the live stream I just did?
Yes, I did.
Yeah, I kind of like talked about in very close, uh, I guess in the same vein that what you're describing here. I was wanting to see certain lows actually be left in place so that we could take
Mm,
the short this afternoon. Um, there's really no way in my repertoire for me to be able to say to you with any great deal of confidence and saying I have something that never lets that happen to me.
okay,
You're just gonna have to trade it, and if it gives it to you, you take it. If you miss it and it doesn't do it, you just have to accept it. And that's one of the things that the perfectionist in me as a young man, I wrestled with that a lot. And in my older years now, it's a little bit easier for me to say, well, this is really good, and I'm doing well without that happening too. So if I miss it, like I did with crude oil and with the Nasdaq, it's fine. $17,000, in one market in two trades. Yeah, who's going to argue about that? You're not even maximizing. It's just three contracts, and you'll be able to yield that in a single day inside of one session. At some point, complaining and saying you wish you could do better or be better, it's counterproductive, and
okay, I understand. Okay,
so you're just gonna have
because
to
this
be a
happens
little.
a lot. I've seen it like over a span of time where it's like it does that where it looks like equal lows, and then ES sometimes runs it, and then my mind is like it tells me, okay, let it go. It's probably SMT. Go the other direction. It's failing to take out those equal lows, but sometimes it's like I see a more maybe six sister NQ is gonna deliver it next, and then I have that problem with like instead of just either like letting the whole trade go out entirely, I think like okay, I should still try for the equal because it makes the most sense, and then it makes either a higher high on the day or it's a whole different like it just does its own thing where it just goes I guess up instead of going down. I think it's gonna go down.
At some point, you'll have to just grow comfortable with saying, "This is a missed opportunity. It didn't take anything from you. It didn't take money from you. It's just a missed opportunity." And they're much more welcome than participating in something you're trying to force or insisting upon, and then it becomes operator error, and then you end up taking a loss. So it's a balancing act that you have to walk through as a trader when you incorporate so many things. So sometimes the answer is simply it's no, and we have to be prepared to have no as what we're asking for. The market says you can't have that. Okay, next.
Okay. Can I ask one more question? It's
Sure.
for I have another question regarding the opening range gap, because something I've seen like repeating pattern with that is more in the sense where we have a large range opening range gap, and it's either like the next 3 days or the following day, Monday or Tuesday, that it returns back into that. Is that something where it's that's like a continuous pattern with that, where we return back into a large opening range gap and start trading towards the midpoint, or is that something that's where it's like they're gonna return back into there, because I know they never leave it open for a very long time. It's under like the either in the same week, maybe it's they leave there's a large opening range gap on a Monday or Tuesday, then maybe Thursday we're trading back into that, maybe syncing in with maybe a Thursday half the week kind of weekly profile reversal, or the following week we're trading back. But I've always noticed that's kind of like a repeating thing I see with that. I don't know if,
It's a tendency that generally happens, but be careful saying that they generally don't keep gaps open very long. They can. I've been in market environments where they've kept gaps open for 2-3 months, and then they're later revisited. So if you get real keyed up on just simply I'm an opening range gap trader, and I'm glad you mentioned it because I actually forgot to mention in the live stream. If you pull up the opening range gap, my fill also was at a premium relative to the opening range gap, and it was at uh, the quadrant or octant right above the halfway point. So take a look at that, and you'll also see that I've missed it was an oversight in the live stream. That's why I don't like to live stream it. But back to what I was saying here in regards to the gap. They're wonderful premise. They're wonderful reasons for something to anticipate and expect. But much like everything else, they're not a panacea. They're not a be all end all. But the more things you blend together to support the idea, whether it trades to it or through it or come back to it just to go the other direction again, all those things have to be weighed. And I was thinking to myself when I was talking to my son, my youngest, he came up to me, he says, Dad, I already don't like working. And I really want to focus on trading. Can you make this easier? And I'm like, I don't have a way to make it easier. I can tell you very specific. This is a model. This is what you want to be focusing on, and give you a sample set of things to choose from, and then I can determine based on what you feel like you're excelling in. And it may not have an opening range gap in one of them that he selects. So does that mean that opening range gaps are not important, or to the degree of importance that you're having right now in your conversation together? No, it just means that a trader can trade without one particular aspect, but by having an understanding of that specific aspect or conceptual idea, it can do only one thing. It can increase your understanding in filtering bad setups and affording yourself the luxury of participating in good ones.
Yeah, it was a really nice day today. I was staring at the ES, and that breaker order block and the Fervada gap were layering really nicely. And that previous day's low were really nice, but they just did not want to trade up there. They said, "Oh, let's gonna send it straight to the ground." It was really nice. But thank you though.
You're
Thank you,
very
Kip,
welcome.
for the opportunity to talk.
Great comments there, Levi. Keeping the conversation going, keeping it flowing. Pippi Banks want to jump up here. We got Time and Price in the house. We got ICT Queen here. So got some good folks here.
Hello.
Hello.
Hey, what's up, kid? How you guys doing? How's everybody?
You jumped in line, but that's okay. How's it going, buddy?
Oh,
I
I'm so sorry.
appreciate the you're like, hey, look over there. Hey, how's it going? That was impressive. That was really impressive how you did that. So anyway, you showed up and I got a smile on my face. So I don't think anyone minds you cutting. What's up? Oh, well, Pippi does. Pippi's got his hand up, guys. Let's just bring up Pippi.
Go ahead, Pippi. You go ahead. I'll jump in right after.
Yeah, come on. Let's go. Jump in here, Pip.
What up, guys? How we doing?
How you doing?
I'm chilling. All right, I got two questions, right? Two questions. First thing, shout out ICT Queen, right? She's a beast. Shout out to her. But I got two questions. Okay, first question. What is the difference between rebalance, redelivery, and then reclaimed? Because I see a lot of people use those terms out of context.
Yes, and I see it too.
It's so great. I love Pippi comes up here and brings some really good charter questions, Michael. I mean, I just want you to see he constantly is bringing the heat with really good charter questions. That's like an advanced question not a lot of folks would have, but I'm just saying, I really appreciate that question, Pippi.
Only a charter member would ask a question like that. So it's nice to hear those types of questions in the depth of where it reaches. But when something becomes rebalanced, I mentioned that today in the live stream right before this session started here with what we're talking on now. I'm talking about a fair value gap that starts with its first utilization as a buy side imbalance, sell side inefficiency. Then it completely trades down to the low of it, okay? And then it leaves. Once it leaves that range, because it does both sides of the delivery, going up and down. So if it's an up close candle, fair value gap, it's a buy side imbalance, sell side inefficiency. When markets are bullish, that is a bullish PD array. If markets are bearish and it overlaps it and shoots below it, then it becomes a bearish inversion fair value gap. Rebalanced, okay, was when we go up and down and then leave that range. It's rebalanced. It's no longer inefficient. It's a balanced area. It becomes a balanced price range. Redelivery is where we have the market create a buy side imbalance, sell side efficiency. And when it leaves that area, trades higher, and then comes back to it, that's redelivery. It's redelivering back to that inefficiency. And what was the other one you asked for?
So we had reclaimed.
Reclaimed, right?
Yes.
Okay, now let's assume for a moment that that bullish fair value gap that formed, and then 3 or 4 candles later, it trades down to the low of it, and then leaves it to the upside. It's rebalanced. The market's rebalanced. Now it becomes a balanced price range. So there's four stages to delivery and inefficiency that's being covered here, not just the 3 you mentioned. So when we go higher, and then it comes back down, if everything remains bullish, and I didn't talk about the things I talked about on the daily chart that led to me being bearish today. If it traded back down to that initial utilization of the buy side imbalance, sell side inefficiency, that bullish fair value gap, trading back down to it there, we would reasonably expect it to be a reclaimed bullish fair value gap. It should act as its first utilization, in other words.
Reclaimed first utilization. Interesting terminology.
I love that.
Does it answer your question?
Now, second question. Yes, definitely. Definitely.
Hippie's all business here, Michael. He's like, yes, next question.
All right, so
Jump
the
in,
next
buddy.
question is, when we talk about implied,
Say it again if we're
a
talking about
PD array being implied. A PD array being implied.
Oh, implied. Okay.
Right? How, we have inversions, right? Now, what is the logic behind an implied PD array? Because I mean, you
Phenomenal
briefly
question.
touched about implied fair value gaps. But what is like the true logic behind a PD array being implied?
When you would expect a clear, visually represented imbalance, like a fair value gap, but there's wicks overlapping both sides of it, that would be an implied fair value gap. In other words, it's not standing in the chart like it would be isolated, this one single delivered candle, higher or lower. It would be a range of wicks in that area. And you could cut right through all of that and see what would be otherwise if those wicks didn't exist. That would be a fair value gap. They're not as strong as one that would be obvious and sitting right in front of you as a single delivered candle that only shows one direction and supporting everything after that price candle forms. So implied is where it could be in price action, but it's masked by wicks. And by having that, it's just, think of it like in terms of its importance, it's much like a volume imbalance. Volume imbalance forces you to be flexible with it. It's not as hardline as a bullish fair value gap that gets traded to the downside when bearish. Then you know what it's going to act as. It's a very finite thing. You expect it to stay in the lower half, keep bodies out of the upper half. So that means it's more specific. It's more finite in the expectancy because you demand it to act as a premium array to send prices lower. Implied is it could, but don't be surprised if it fails. So it's not as strong. It's not in the grand scheme of things. If we rated things like some of you guys ask for all the time, it's like, can you rate the strongest PD array? In what's the most important PD array? Implied and volume imbalances share very similar characteristics, but the weakest in terms of requiring flexibility on the part of a trader using it, the volume imbalance because it can go back and forward, through it multiple times. Implied has many similar characteristics to that, but when it works, it's very strong, and it literally will surprise you as to why it just reacted there. And it takes a lot more than the scope of our conversation and what we have in terms of time here, but that's as close as I can get in the scope and time that we have here to address it.
I love that. Thank you. Thank you.
You're
I
very welcome.
appreciate it.
So the PD arrays all have some level of rules, and the implied rules are just a little more flexible.
Well, think about like
Is
an
that a
implied
succinct
dealing
way?
range,
Yeah,
an
yeah.
unrealized dealing range. You're looking at something that technically isn't even in the chart yet.
Right.
But if you know where it's going to draw to, and if the markets are algorithmic, then you can scale that range that has yet to be delivered to if it's going to go to that target. And you can reasonably grade where those next PDA rates are going to form based on the lower quadrant, consequent encroachment, upper quadrant, and now you have the occupancy incorporate. So it gives you a depth of market that is unique, and you don't need the gimmicks that they talk about with level 2.
That is such a great way of explaining it. The implied, unrealized occurrences within the market and within the algorithmic environments that we're trading, right? So the implied is the yet to occur or something that might be there hidden, right? Like there's an underlying
beneath the surface
layer,
Yep.
right? Underlying layer to that implied PD array that will then offer even further strength or it's rule bound. That's what I really love about this and how you're describing it is how where and how these things are rule bound with being strict or not, and where and how that flexibility could then add towards strength in once it's formed, right? That's as you're saying, the unrealized range. Like as these PD arrays form within the implied range, then they become even stronger. That's what you're saying, right?
Yes. Because if they form at a time when you should see them form based on time and price, price is determined by the unrealized dealing range to the target you're reaching for. So you can grade that from where you're at the start of the inception of the price run. If it's bullish, where did that price run begin? And then where is it aiming for? Where's your terminus? You can lay your fib on that and grade out where the octants and the quadrants are, and you can anticipate fair value gaps forming at those specific levels before price is ever even there. I've done many examples of that, and that's what I encourage all of you to be studying. You should be looking for those types of things. You should look for it in old price moves. You'll see so many things if you start looking at it like that, instead of just looking for, give me a good entry, tell me where my stop loss is, and let me copy you. It's very deflating to me as an educator when I have the majority of new people coming to me just for that. They want to be spoon fed. When I'm giving you a perspective, if you just apply it for a couple months, once you acquire the skill, I can't call it back. Like I can't take it from you. I'm asking you to be responsible with it, obviously, but once you learn it, nobody can take it from you, and you have a superpower. Like you literally have a mutant power that gives you an X-ray vision into price action, where volume profile, level 2, footprint, all that stuff, that can only help you with candles that have already formed. I'm in the future. I'm looking at where these things are going to form before they form at a time and a price level before they even get there. And once you have that under your belt, it gives you a greater degree of confidence that if you are not careful and you talk too much and you're real wordy, it's going to sound like you're arrogant. It's going to sound like you're a narcissist, but you're just in a different plane of understanding, and everybody else is beneath it. And it's hard to have a conversation with somebody because they can't see it the way you can. And once you get it by doing the things I'm telling you to do, it's game, set, match. It's done. There's no competition. You literally are in your own plane of existence, and there's no ceiling.
And that, ladies and gentlemen, is the excitement that Michael and I have talking to each other, because knowing what that feels like with a level of certainty of what these concepts are, that's the most rewarding thing you can ever have as a trader, is These concepts will never fail you. They'll never fail you. You can step away from the charts as long as you want, and you can come back and you can get in sync. You can get in sync with the market with these concepts, these logic, the way in which you're applying logic to the chart. It will never fail you. It's magical. It's wizardry.
That's it.
It will never fail you.
Hello?
Yeah, jump in
Oh
here,
yeah.
buddy.
What's going on, everyone? Peter, Kit, Michael, Pit Munch, everyone. Really quick, I just had two questions. And I'll get out of your hair. Really quick. So I only recently jumped into NWOG, NDOG. I've been sleeping on gap theory. And I finally jumped into it like literally 2, 3 weeks ago, changed everything about my trading. And I watched this one video of Michael saying he mentioned it very slightly. He said, "Oh, you could see the wick kind of like slipping underneath this NWOG or this NDOG. I forgot which one it was. And then you see it bounding up. And that kind of like created this idea. Can I anticipate accumulation underneath? When I already have, say, a bias, can I anticipate accumulation underneath first presented for value gaps, end dogs, end wogs, stuff like that? Or would that be dangerous for me to try and see, like, oh, I see maybe a little consolidation underneath it. I want to enter in there because I see it accumulating underneath it, and I know it's going to bound up, if that makes sense.
That would be something that I would entertain if there was a relative equal low beneath it. It would justify them wicking down below it to clear those relative equal lows out,
Okay.
and then accumulate inside of or above the end dog or end wog. That I can see that happening, but I'm trying to I kind of have a hard time visualizing what you mean apart from that, because that's the only thing I could see that would align with what you're describing
Like,
from my
right.
perspective.
Right, but did I ask the question like in a way that it was clear, or I don't know?
I think let me see if you asked the question. You're asking essentially a market maker model, first stage accumulation below directional inefficiency, a high time frame directional inefficiency, such as an NDOG or NWOG. Is that
Yeah,
correct?
something like that. Like we're in the beginning of a market maker model, buy model, right? And I see an end dog sitting right above, and I'm kind of bullish.
I mean, those would be mechanisms within the schematic that you would look for, right? You would accumulate in discount if you want to distribute into
Right.
premium over a high time frame, right? Those would be schematics as taught throughout the
Okay.
compendium. So accumulations and discount typically deliver to premium,
Right.
right?
And so and these accumulations, I know you guys were talking about like implied PD arrays and stuff like that. I wanted to know, like, can accumulations just as well also be anticipated?
Absolutely. Absolutely. That's essentially what you're doing when you're trying to go
Mhm.
long, or if you're going short. You're participating or actively trying to participate in the accumulation phase of the next price run that has yet to begin and come to terminus. So you're absolutely. It's something that we all do as traders, whether they're fruitful endeavors at the end of the trade idea is another altogether thing.
Got you. Amazing. And then my second question. Um, so really quick, I'm not gonna dump any trauma or anything like that because that's not the place near the time nor the time. But I am currently in the process of building a macroeconomic data bot, and the reason why is because I had gone through a lot of spiritual um, I guess, experiences with God very early in my life to the point where I felt invincible. I felt like, I'd pray and I'd thank for something, I'd feel grateful, and I'd be like, oh, I know you got this. Like, I know you got this for me, and I appreciate you so much for it. And days or hours later would happen in such great defined detail that literally bet my house on certain projects and businesses and lost. And that, destroyed my family's relationship with me. So I said, you know what? For my comeback, I'm going to put what I have under my belt, which is my skill set, learning Michael's information and everything for the past 7 years, and I'm going to build the most powerful automated system I could possibly think of. And I'm just so grateful. But I wanted to ask, can building a macroeconomic data bot using the dollar, the yield, interest rates, maybe even the VIX be sustainable? You know how sometimes the dollar might not, move in the same inverse direction as perhaps like NQ, right? And stuff like that. Would you say there's anything that you might have in terms of advice for building a macroeconomic data bot?
I don't give the advice only because there's very large conglomerates right now that are actively using my concepts. I know I get a lot of flack from people, and it's usually all the retail traders where they're selling stuff. There is enormous interest in bringing to light the things I'm teaching in a large conglomerates. If I said their names, you'd be like, what in the world? They've reached out to me. They asked for interviews. They asked to be able to pick my brain. They've asked to pay me enormous sums of money to sit down and just let them pick my brain and say, okay, what about this? What about that? And I know what they want. They want the documentation stage of what it is they're building.
Okay.
And whatever they pay me, it would pale in consideration to what it will yield them. And I'm telling you, like I tell them, everything I've spoken, I've said. If you don't take the time to listen to those things there, you're not going to get it any other way.
Right.
So I understand that there's an active pursuit to automate a lot of things. And yes, there is absolutely 100%. And you can code all the issues that you mentioned with the dollar. When there's a decoupling, all those things can be coded. I have all those things. But the point is what you're going to try to build will be an endless pursuit of perfection, basically.
Yeah.
You'll get it to do one thing, and then you'll want to build onto it to do something else. So if you're going to start it, just know if it's a one man pursuit, it's going to be a lifelong project that you'll never probably come to the end of where you're completely satisfied. It doesn't mean it won't work for you. It just means that you will be always building on it because there's so many facets to the market and how it can be incorporated.
Right.
So, I'm not going to discourage you from it, certainly not. But just know that you're taking a big bite. it's gonna be hard to swallow. And if you're okay with having it as a hobby and a pursuit that will fill the rest of your life up, and it'll
Man.
be a wonderful endeavor. If it's something you're passionate about and you're intellectually equipped to do that, if I had no family, I had no kids, and I would be doing that very thing with a lot of other things I've learned. But I don't need it because it's in my head. But for someone that wants to automate it, it's great. What are you going to do with it when you have it built?
So realistically speaking, and I'm going to speak from the truth. You know how you said it was like if this is a one man army thing, good luck. Not to discourage you, man. And how how I was saying earlier how like God, really he I don't know, he just does things, man. I was like building it. I was in the middle building it because I'm in this huge pursuit of like I gotta redeem myself to my family, and I need to get my mom a home. I want to give my family a place to rest. And I was like, I'm gonna do this. And there's nothing that I don't have a family, I don't have kids. So this is like I'm giving my absolute all to. But what am I gonna do with this? Is I was thinking of bringing it to market, maybe bringing it to a lot of traders, communities that potentially like using macroeconomic data. I was gonna call it something like Century, and it's like I was thinking, okay, this is like modern money mechanics we're talking about here. I mean, interest rates. That's one of the biggest drivers of the market. We have the dollar, we have, you know what I mean? And so I was like, okay, if I can make this make sense, because a lot of the times people trade and the technical analysis is wonderful, but if you have those other confluences, if you will, it's like you're trading in those conditions that are meant to help you, right? Like if for example, let's say I'm bullish on NQ, right? And I see the dollar is absolutely dropping. We also have the yield dropping. I'm like, wow, this is wonderful, right? Because then this is going to be yet another confluence that is going to provide that confidence, right? And so I was going to make it a probability matrix with all of these other things kind of put in together, and then eventually put an entry model on it. What I wanted to do with it was bring it to communities. Maybe perhaps if I make it a really badass bot, dude, I was thinking of selling it. You know what I mean?
Mm-hmm.
Just so that of course, the end all be all is to get that goal and put a house key in my mother's hands.
It sounds like you're trying to create like a tool for quantitative analysis and qualitative analysis in one package.
Yeah.
Yeah. There's a market for it for sure. I mean, there's a lot of people that want that extra encouragement and automation because there's a lot of things to filter through. And if they had that type of backdrop and support, if you can build it, there's certainly a huge market that wants it.
Oh yeah, God willing. Oh, the thing I was gonna say just before I go, just know, whenever you, and it could, this is for everyone. You could be down rock bottom. It doesn't matter if you have an idea, right? And it's backed by the faith of God. I'm telling you right now, the people will come. I, for example, had no idea how. I don't know how to code, right? I don't know how to develop something so intricate. How? But guess what? 8 months into developing this project, I had someone DM me on Instagram, super random. I didn't even answer the guy because the guy has so much experience. I looked at his account, 6 years of experience, has done trading bots before. I'm like, this guy's gonna charge me 50 grand easily. Dude, tell me how. I jump on a phone call with him just to entertain the idea. He tells me, Geo, because my name is Geo. He tells me, Geo, I only want to build something great. You could give me a percentage if you want. I have a 20-person team at my disposal as well. Dude, when I tell you I cried and I knew
Oh wow.
that was sent from God. I know that. I had no idea. I was like, how am I going to get the funds to even build this thing? No idea. I knew for a fact that was a synchronicity. That was God sending it to me. I knew for a fact that this faith is what materializes everything. So yeah, I just wanted to share that for any of you who, perhaps may be in a pursuit of anything. Thank you.
You're very welcome. I wish you good luck with it.
Thanks, Michael.
Got 8 minutes, Kit.
Highs. Yep. We'll be wrapping up here, and we will be hard stop in 8 minutes. Let's get ICT Queen up here. Let's get time and price, and we'll wrap up with Wangaru and see where we're at there with XTRVK.
Hi.
ICT Queen, how's it
I'm
going?
fine, thank you. Kate and Peter, thank you for having such an incredible space to bring up traders together. PP Bank, shout out to you and our great grandmaster, the inner cycle, Michael. I'm saying well done to all the incredible works you're doing for every one of us out there. I'm from Nigeria, Africa, and you have changed a lot of lives with your great knowledge, your great wisdom, the materials you've put out there. I was mentored by one of your charter students, and I trade the liquidity rate, the breaker structure, the returns, other blogs. I trade the IBDA 60 days, IPDA data 60-day ranges. I trade the MMXM. I trade the accumulation, manipulation, distribution. In fact, I studied the ICT core concepts, the old core concepts. Those are the ones I study. And I trade the higher time frame very well. I trade the monthly, the weekly, the daily, the 4 hour. Those are my very strong areas because I like to have a long-term perspective about price. And you gave us a very impeccable tool to have context around the movement of price and narrative that gives us a sort of confidence to say price is going to do XYZ and price actually gets there and does XYZ. That's one very impeccable thing you've done for us traders. You've given us a tool to work with. I trade a lot of ICT models. I trade a lot of the models, but my favorite is the MMXM, the market maker buy and sell model. When you can see it on the higher time frame, is a gold mine. Is a gold mine. If you can get to see it confluence with the IBDA 60 days data ranges, is a bombshell. You can hold your trades, make a lot of money out of it, and it do not disappoint. So I want to say thank you to Michael for changing lives, for being a face of change, for being a grandmaster to lots of us out there, for being a mentor that has taken the hands of young people of our generations, show us that we can actually do this. You did it, you came out well, and you gave us the opportunity to be able to follow you on your mandate. So this is a shout
Praise,
out to you, Michael.
praise the
Thank
Lord.
you. I appreciate you a lot. You are indeed incredible. And I look forward to following the legacy you've put out there. All of us that are ICT traders, we value you. I love the fair value gap, especially the fair value gap.
ICT Queen,
Okay.
did you have a
No,
question?
no, no. I just want to give him appreciation.
Oh shit! No
No
question.
question at all.
Jeez
No
Louise!
one.
Thank you very much for the lecture and taking up and usurping the last few minutes of Michael's time. We all appreciate the lecture.
Thank you.
And in wrapping up,
Thank you,
and
kids.
in wrapping. Yeah, I know. Thank you. Great. Moving forward, time and price. You're going to wrap us up.
Oh, wow, Kit. Thank you. Hello, everyone. Michael, thank you so much for your time. There's multiple people in this room who have fundamentally changed my life. I'm going to,
Oh, is this Nick? You changed your name?
well, I did, just for anonymity.
I
And
didn't realize that. What's up, buddy? I recognize your. I recognize your voice. How's
Hey,
that?
man, I'm excellent. How are you?
I'm very good. Sorry, ICT Queen. I didn't mean to be so loud at the end. We just have a few
Okay.
minutes, and I
Oh, that's
really
completely
would
fine,
love if
kids.
there is a
It's
Okay,
question.
fine,
okay. Now,
kids.
I
I
want to keep this
understand you.
I
concise.
want to appreciate, and if I'd really like the last few minutes to be Michael's,
Okay.
and I would love for someone to tee him up with some type of question. Right? That's what
Absolutely.
I would really
That's what I'm here
love.
for, Kit. That's what I'm here for.
All right. Thank you
All right,
so
Michael,
much.
so I've got a question for you. And I'd like to give you just a little context of where I'm coming from. I listened to so much of, especially your talk of what I would tell myself if I was 20. I listened to that every morning for probably about four months. This was years ago. It was part of my foundation. Cookie cutter bites, being content with enough. That was a lot of my focus. Moving into an area where I have more confidence now. I can work in the markets and I can make some stuff happen. I'm finding that. So I've been working with 30 handle ranges for the last 830 days or so. And just in the last month or so, I only trade, I've been trading 200, I've been trading trades at the SMR, just looking for a little bit, to be content with enough, And, but I've been positioned for massive runners for years and years. But being content with enough, how does one, am I already in the wrong to think that I should be doing more? How does one go from capturing algorithmic sections of price, even if it runs 200, you're okay with 30, to grow to capturing that 200? Um, how does one grow? Am I already looking? Am I Icarus flying too high to the sky here? I'd love your wisdom on this, Michael. Thank you.
You have to schedule a runner. So whatever you're getting involved in, whether the trade is, one of the things that was the epiphany for me is when I was trading bonds. One contract, I was able to hit grocery winning amount of money. Like it was going to happen. It was really easy to do it. It was fine. And then one day, I'm thinking to myself, what in the world? I'm not even scaling up. Like, what happens if I scale up? And what if I start multiplying what I'm already doing? And I was scared to do it. Initially, I was scared. I was afraid I was going to break it. I thought I was going to do something wrong. And if I had a tailspin, it would scare me and take me out of the mindset I had adopted. So what I ended up doing was saying, okay, I'm going to do two contracts. I'll take my standard pound of flesh, and then the other one, I just roll to a stop that performs in a manner where if I get stopped out, I can't complain about it. And I let it go and see where it goes. And that's how I got to trusting that it's going to run to these standard deviations, how it's going to run to next day's high, next day's delivery to previous week's high or previous week's low, and looking for these stretched out, real, protracted type of a target, which means shorting at the smart money reversal and distributing it to beneath the original consolidation, where the original consolidation's self liquidity would be. For me to get to that, I had to stretch beyond my comfort and pay myself something. And usually it was anywhere, if I was getting into the point of multiple contracts, if I had a way of taking the majority of the trade off in just the smallest degree of the position that I had left on, I wanted to get the most lion's portion out because I didn't want to be upset about losing all of it and not having an unrealized gain turn into a loss. So you have to schedule it. This is what you're expecting to make with your normal model using the ranges you're incorporating and working inside of. But to stretch your bounds and get yourself comfortable doing that, you just start with one contract, whether it be a micro, whether it be one mini, whatever it is you're trading, let it run, and then record how you feel. And you have to convince yourself over time, desensitizing yourself, saying, this is what I expected to feel, and this is actually what I felt. And then encourage yourself saying, this wasn't as bad, or this wasn't as scary, or this wasn't as hard to hold. Even if you felt like it was, you tell yourself in your journal, you record it in your own handwriting, you say it verbally in your mouth, you say it out loud, and your subconscious will retain it. And because it's positive, it's soothing, our subconscious will take that as encouragement. It's a positive feedback, because everybody, whether we're male or female, we all want positive feedback. We want something that encourages us, that says we did a good job, well done. And when we do that to ourselves, it's meaningful. You may not feel like it, but beneath the surface, when we make decisions, when we're thinking about things that are highly demanding in terms of money, finance, performance oriented results, when we feed ourselves that positivity and we reward ourselves exponentially and through a modular delivery, that means we know where we're aiming for in terms of a performance goal. We want to learn to hold on to a trade that's beyond what we're used to doing. The only way to do that adequately is to use the smallest degree of participation and remove all of the uncertainty and the reward or punishment if it doesn't pan out, by taking the largest portion that you can take off the trade and leave the smallest fractional portion left. And you let that go. And you do that for a little bit of time. And then you add a larger portion of what you don't take off, you leave it on there. And you get to the point where you take the smallest portion at your normal profit, and then you desensitize yourself to let the majority of the trade run and see how many times it goes against you. Because you're putting the maximum amount of, if it fails, I don't get to keep that much anymore. Well, what happens if it does? What if it does? If you spend a week and 3 times out of the week, you give back all that unrealized gain. You fall back on what you did when it was going with one small fractional portion of your original position. Go back to doing that. Prove to yourself that it isn't broken. You're just feeling the weight of the money not coming into your account as realized profit and gain. And by doing that incrementally, you end up expanding your comfort zone, and you'll be able to accomplish further holds in duration and time. And you will not be a victim of that. I hope it does, I hope it doesn't. That stuff goes away because you systematically removed it with data that supports the idea that what you're doing works. And if you have a little bit of a tailspin, dial back what you're doing. Take more off in the beginning and leave a little bit portion, and then you just manage it. If you got, say you're carrying 10 minis, eventually you want to take 2 off and leave 8 to run, to build that comfort zone of, I can press into that and I don't need to take all of my portion off at where I'm used to at 30 handles. I'm going to expand my comfort zone by letting my largest position that's unrealized to hold on to that and just desensitize myself. How many times is that failing? If it does fail, roll back to the next trade you take the largest portion off, and let the smallest portion go to as a runner until you feel comfortable scaling back up to that. And you can go splitting it. You can take 5 off, leave 5 to run, and then go back to a full 2 contracts, taking at your first 30 handles that you're comfortable taking as your standard model, and then let the 8 contracts run, assuming that we're using 10 contracts in a mini. You let that go, and it's a matter of just balancing expectations, desensitizing yourself to the outcome. You don't need every trade to pan out. You're in control of everything. You are in control of everything. Once that trade is a winner, once it's a trade that is in a losing column and it takes money out of your account, you're in control of when you're going to press the button then. You're in control of how many contracts you're going to leverage. You're in control of how much you're going to scale off and how much you're going to leave as a runner. You got to constantly feed yourself that information in your journal, instead of saying, I wish it would have did this and it didn't and I feel demoralized. It's a matter of controlling your expectation, scheduling you holding that trade like that. But you don't just do it full position. It never works like that. It's too hard to do. So that hopefully it's accomplished, the solution that you're seeking. If not, it's at least a good start.
Well, I'm so thankful for you to say that, ICT, because that's exactly what I was practicing with this last week. And what I noticed was setting a position at 3 a.m. and waking up at 6 a.m. for a multiple 100 handle run. That euphoria was I suppose just with time, euphoria goes away like with everything. But the robotic deadness of 30 handles I'd appreciated. Perhaps it's just a case of you encounter the euphoria, you're mindful of it. But thank you so much for your advice. Thank you so much, ICT. Appreciate your time.
You're very welcome. Good question.
Phenomenal question. Thank you, Michael, for being here today.
It's good
Really
hanging out, man. I
nice.
had fun.
Trade around back.
Just in the future,
Yeah.
this is for everybody else. We've said this before, and I absolutely 100% appreciate the flowers and the the cordial thank yous and all that stuff. But it does not get lost when you send it to me in a text format on X. Okay, that's certainly adequate enough. When we're here, we want to kind of like utilize our time and the bandwidth that we have because I don't have hours and hours and hours to spend anymore. I'm more of a family old time grandpa now, so I want to get back to that. And when we have all these times when people want to say hi, and have a little thank you so much, thank you so much. I believe that you mean it, and the fact that you're willing to study my stuff, I assume that's how you feel. You don't need to articulate it. You don't have to say it. Everybody heard it before, and we want to keep things moving and keep it fresh. And it's just I don't want to produce a diabetic coma. And that was the reason why I kept the comment section off of my videos. And if you look at what they say all the time, you see it. So now you understand why I didn't do it. It wasn't because I don't want you having a forum to talk, exchange ideas. That's what we used X for. So, in the sincerest way possible, I love the fact that you share your appreciation, but it makes me uncomfortable because I'm hearing you say it, and it makes me emotional, and I don't want to feel emotion. It's just like when my trading, I don't want to be emotional. And if I'm here to answer questions, if I want to be part of the community, I want to be able to be very analytical and not have emotions blind me because you said something very sentimental and it moves me. So I love that you do it, but I don't want you to do it. If that makes sense. So hopefully it didn't come across rude or obtuse.
No, we all as a community just need to stay mindful and respectful. And we'll leave it there. Trader Roundup, Return of Michael, 418. I like the time. See you guys next time. Thank you, Michael. Thank you,
Take
everybody.
care.
Thank you, Peter. Thank you, Pip Munch. And thank you, Pippi. Thank you, ICT Queen. Thank you, Time and Price. Everyone, Kai's, Dise, everyone that's here. Appreciate you. See you next time.
Be safe.
Bye, everybody.